JoDee Leahy with the Leahy Team at Keller Williams Lakeside, and we're about to get real. Today we're focusing on real connections, and that's the part where I introduce you to real professionals here in the local area who make homeownership possible, easier, and more profitable. So I'm really excited for today's introduction. We are here at Impact Loans in the city of Troy, so let's go inside and meet him. I'm here with Ross Bahro. He is the CEO and co-founder of Impact Loans. Welcome, Ross. I'm so glad you had some time for me here today.
Yeah, thank you so much. I'm so happy to be here.
That's fantastic. Ross, he's one of my favorite lenders in the area. He is an accomplished leader with a winning track record on a variety of different markets, and top performer at both the individual, the team, and the regional levels. Is that correct?
Yeah.
This is part of that, right? You got a little
so
award going on.
That is the Impact Loans heavyweight belt. So that goes to whoever leads the team in closing volume every month. So it's like a traveling trophy.
I've heard about this contest. It's really pretty cool, the thing they do in their company. So
yeah.
Very cool. I first met you at a networking meeting.
Yes.
And since then, I've used them both personally for some of my own personal loans, as well as I've recommended them to friends, family, and clients. And every single time I've sent someone to Ross, they've always had wonderful things to say about Ross and his team. They are fantastic at communication with their clients. They are incredible in their honesty and their integrity and looking out for your best interests and not just their own. They're fantastic on just timing and efficiency with some of the fastest closes that I have seen in the industry, and just all around a fantastic team.
Wow, thank you so much, JoDee.
No, I am so glad to be able to work with you.
And I did not prepare that for JoDee to say. I did not send that to her in advance. The winning track record thing maybe was me at some point. I'm just kidding. Thank you so much, JoDee. It helps when you have a really great real estate partner on your side like you. You're like so dialed in. Anytime there's something underwriting needs, the processor needs, JoDee's either already got it or so on top of everything, it just makes the process seamless for clients. So shout out to you.
I appreciate that.
Yeah.
Now, it really, having good people on your team when you're in a transaction in real estate is really key. And we're going to probably talk a little bit about that a little bit here later. But I first wanted to, let's get to know you a little bit. How long have you been in the mortgage industry?
I've been in the mortgage industry since June 2016. I started in the mortgage industry when I was 20 years old. Actually, I got into the mortgage industry because I was looking for a business internship as I was in college. And then I interviewed at a retail bank. And they said, well, have you thought about becoming a loan officer or a mortgage banker at the time? I said, not really, tell me about it. And then I ended up interviewing for that position, and the rest is history.
The rest is history.
Yeah.
Now, at some point around 2022, you made the switch from being an employee to becoming an employer and starting your own company, correct? That's a big change. What sparked that?
Well, I knew I was getting married. So I knew, I was planning to get married and having kids, and I was like, okay. I had worked my way up the ranks. So from being a mortgage banker to what they call a president's club, you get to a certain ranking, and then a director of banking. And, I had a team of about 20 people under me when I left. And I knew in my mind, I always wanted to work for myself. And there were a lot of reasons why I wanted to branch off and start Impact Loans. But one major reason why I chose to do that at that time was I knew I was planning on proposing to my now wife. And I knew if I was going to make a change like that, it would be easier before I had, wife and kids, As you know, I have an 8-month-old now. So,
she's adorable.
That was, thank you. That was like really the timing factor involved is like, if I'm going to do this and take this chance and start Impact Loans, I wanted to do it before, I had established my family.
Yeah. Okay. So you had a big long-term plan ahead.
Yeah, I kind of knew it was coming, and I was like, it's going to be easier to do this as, in a way, single. Obviously, I was engaged shortly after I left, but I felt like it was the right time to do it. Yeah.
That's fantastic.
Yeah.
That's very cool. Now, you at Impact Loans, you're a mortgage broker. Is that correct? Not
Yes.
a mortgage lender. Can you kind of help our followers understand what's the difference between a mortgage broker and a mortgage lender?
Yes. So a mortgage broker, my role is to check between different mortgage lenders and get my clients the best terms on their loan. So you could go to a mortgage lender and you could say, hey, I'm trying to get a loan, and then they're going to give you whatever they can offer you in their portfolio of loans. Whereas with me as a broker, I'm able to shop multiple lenders. A lot of lenders have a wholesale department where they work with brokers and offer their clients better pricing because you have the option to choose. So I tell my clients often, you can shop around, but I'm going to do the shopping for you. I have over 20 different banks I can check with for two reasons. Number one, to get you the best terms, but in some cases to get you the program that works for you. Not to get like too off topic, but there's a program for clients that just have a profit and loss statement where we can approve somebody that has a profit and loss. Maybe they don't show their income on their tax returns most recently. Their business maybe picked up recently. We have alternative document programs for people. We have different solutions for people that maybe one lender won't offer. So that's why it benefits you to work with a mortgage broker because we can explore what the best option is for the client.
Okay, so you have a much wider range of programs. And
exactly.
Yeah, that's because you're shopping among all the different banks, not just one.
Yes.
That's one of the reasons why he's the best, really.
And that's why it's the best to work with a mortgage broker. I mean, before I became a mortgage broker, I was at a retail bank. And part of the reason, besides the timing aspect that I discussed, why I wanted to start Impact Loans was because I was turning away so many people that just did not meet that cookie cutter. They didn't fit into this box.
Yeah.
But there was people like self-employed people.
Like yourself.
Like myself now,
Yeah.
And I'm Chaldean, in the Chaldean community, there's a lot of self-employed people. And so that really hit home for me to be able to help people that are self-employed, even though they might not be a cookie cutter client. We know they have the ability to repay on the loan. We know they're more than worthy borrowers. So I wanted to be able to help different people that were getting turned away. And I wanted to be able to also have a network I could recommend to people. At retail banks, a lot of times they don't want you to refer people out to, realtors or insurance people. They're like, just don't get involved there. I wanted to be able to say, I can't help you with this, but I know somebody that can, and create a long-lasting relationship with my existing clients.
What would you say is one of the biggest misconceptions that people have about getting a mortgage?
Oh, wow, that's a good question. I would say probably the biggest misconception is that it's really hard. We make lending easy. A lot of people, when they close their loan, they're like, wow, that's all you need? A lot of people are really intimidated to get a mortgage, to buy a house, because they think it's going to be really difficult and they need all this money. But there's so many programs out there to help people become homeowners, like down payment assistance, low down payment options, that your grandparents don't know about. So they're telling you that, kind of the rules from when they bought a house, things have changed drastically. So that's a big misconception. That's hard. It's actually easier than a lot of people might think.
Especially with a good team.
Yes, absolutely, yeah.
We're going to be introducing you to a lot of people that can be on your good team because that just really smooths the way and can make your transaction so much better. Ross is one of those people. You need to get a really good lender or mortgage broker in your corner.
Yes, indeed.
Thinking of like someone who's just thinking about maybe buying a home, where can they start financially? What should they be working on first?
So somebody that's thinking about buying a home, the first thing they can work on is their savings. So for example, if you're getting into a home with no money down, which we have programs, we have a client that's closing on Friday in Georgia with no money out of pocket. But it helps on the approval if you have money in reserves. So even if you're not bringing any funds to close, having a little nest egg set aside to show that you have the ability to make future payments, it's a great jumping off point.
That's a great start. Okay, and how early in this process should they start talking to a mortgage broker or a lender like you?
The minute they think about it. There's no reason not to. It's like getting the playbook. So if you're considering doing something, talk to a loan officer. Most good loan officers won't need to do a hard credit pull. So if you're concerned about having an inquiry on your credit because you might be further away than just a few months, we can do a soft credit pull. We can talk about your income, and we can discover basically what it's going to take to get you into a home and what the terms will look like with just a over-the-phone consultation. No documentation, no credit report needed. We can really talk about it and see what's possible for you so that way you can plan ahead. Otherwise, you're kind of making it more difficult on yourself because you're going to wait to the perfect time to talk with somebody. Just talk with somebody and figure out what you need to get from A to Z.
And you're going to help them make like a game plan.
Yeah, exactly.
Yeah. And just for the lingo, for those of you who don't know, a hard credit pull is one that will impact your credit score, but a soft one will not. So it does not harm your credit score whatsoever to have a soft pull taken.
Absolutely. And on that topic, for most people that are getting pre-approved to buy a home, I recommend doing a soft credit pull because it's not going to have an inquiry in your credit. It could take you longer than you think to buy a home. There are certain cases where I will recommend a hard credit pull. If you're someone that has low credit, possibly, 580 to 620, that credit is more borderline. You will meet the minimal requirements, but sometimes the risk will outweigh the approval and it can prevent you from getting approved even if you're at that minimum credit score. So in those cases where somebody might be borderline, I may recommend that we do a hard credit pull so I can actually get the loan underwritten fully up front so we can ensure you have a loan when you do have the contract on the house if it's not an open and shut case.
Fantastic. Another good reason to have someone in your corner who's a strategist, not just someone who's just going to push you through every single program. So fantastic. Let's talk a little bit about interest rates. How do interest rates affect someone's ability to purchase a home?
Yeah, that's a great question. So interest rates affect someone's ability to purchase a home because it's going to relate directly to their buying power. The lower the interest rate, the lower the monthly payment's going to be. Right now, we've been seeing a lot of issues with affordability, especially for first-time home buyers. The good news is we're seeing rates go down, moving in the right direction. So it's going to open the opportunity for people, and that's going to allow them to qualify for a higher amount, which might be a more fitting house for their family because they're going to be able to afford a higher approval because the rates are down. The payment will be the same, but they can qualify for more, if that makes sense.
Yeah, that makes sense. So yeah, it directly relates to when you say how much they can afford, the price of the home you can be looking at.
Exactly.
Right?
Yes.
Okay. And is there ever really a bad rate to get into the market? What do people do when the rates are higher?
When the rates are higher, it's all about the payment. So at the end of the day, if you're renting, you're paying 100% interest rate. You're not getting anything out of that. So what it boils down to for people is their budget and their payment. What can you afford on a monthly basis? Where do you want to be? Because the other side of home ownership is appreciation of your asset. So yeah, you're going to be paying an interest rate, and that's going to affect how quickly you pay the principal down. But also, it's good to be a homeowner because homes typically appreciate in value around 5% every year, sometimes more, sometimes a little bit less. So as you're paying down that house, you're also building equity, and so often we see that as the down payment people use to get into their next house. So I think it's all about the investment and what you can afford because if you're renting, you're probably going to be paying a little bit above whatever the mortgage payment is of the landlord. So renters are being affected by interest rates just as much as homeowners are, except they're not getting the advantage of building equity.
That's true.
Yeah.
You need to remember too that 5% appreciation rate he was talking about, that's not on the money you put into it because oftentimes you're putting in 20% or less in that home. You're not getting 5% on that cash you put in. You're getting 5% on the entire home. So the payback on the cash you're actually putting in is a much higher rate.
It's very true. Even personally, when I purchased my home back in 2018, I put 3% down. And by 2021 or 2020, I was able to refinance, and I went from 3% down to having 15% equity in my home because it had appreciated. So that was something that
500%.
That was a big change. That's not going to happen for everybody, but it worked out for me.
That's fantastic. Real power of home ownership there. Okay, so what are some of the options that do exist for first-time home buyers here in Michigan?
There's a lot of programs. One program we absolutely love right now is called Home Possible. It's a program through Freddie Mac. And this program helps serve borrowers that are within the median income limit of their area. And you can qualify for up to a $2,000 lender credit if you fit within that criteria. So it's a great option for people to get a really low interest rate, even if their credit isn't perfect, because they're a first-time home buyer and their income is within the median income or below the median income of that area that they're buying.
That's a great program.
It is a really great program. People benefit from it a lot. And also, it can be used as a refinance. So if you're currently a homeowner and you want to refinance into a lower monthly payment, pretty much anyone who's bought a home right now within the last 3 or 4 years is in a position where they can refinance and it will make sense.
Mm-hmm.
So if you're somebody that bought a home in the last 3 to 4 years, look into it. Maybe call your loan officer, call me. It's very likely we'll be able to get you a lower rate that could make a lot of sense. And if you're someone that could fit within that median income, it could be a total game changer. We're seeing huge discounts from that program.
And when you say it makes sense, you're going to run some numbers,
Mm-hmm.
and you're going to kind of look at what the cost of the loan, what is it going to cost
Yes.
you to refinance?
We're going to look at the cost versus the difference in interest rate. For example, I have a client that bought their home back in 2023. And at that time, they were at a 6.99%. We're refinancing them into a 5.375%, and their closing costs are only around $4,000. And they're getting a very low interest rate. It's saving them on a monthly basis about $400. And the really cool part is they bought the home about 2.5 years ago, so they're in a 30 year. We're putting them into a 27 year. They're going to pay the home off 6 months faster than they initially would have. They're losing no time on their loan and just taking advantage of a lower interest rate that is going to save them $110,000 over the life of the loan. So it's pretty awesome.
Definitely worth consultation.
Yes.
Maybe something like that could work.
Have a conversation with somebody. Like I said, you don't need to have a hard credit pull done. If someone tells you that you need to, call somebody else and see what you can do.
Absolutely. Okay, let's talk a little bit about, we were talking about how having your team with you when you're buying a home is very important, to have all these different team members that work hard. What do you see as this collaboration? How does that help the transaction?
You know the people you're working with are reliable. You know that because you've worked with them in a way, you've vetted them. So you know the reflection on you to the client is going to be strong. But it just builds trust with the client, I think, more than anything. Even if you can't help them, if a client calls me and they really just need insurance and I connect them with the insurance person I use and they're able to save money on insurance, well, that's just going to strengthen my relationship with the client, and it's going to build trust, and they're going to know that I'm somebody that they want to send their friends and family to.
Well, and knowing that you can trust people, even in the hard situations, because, you know, real estate has a lot of moving pieces, and there's like 100 things that need to come together in order to purchase a home. And oftentimes you'll get through 75% of those things and something goes wrong. It just seems something almost always goes wrong, doesn't it?
Sometimes.
Sometimes. We do have those smooth transactions and we love them. But when something does come up that we didn't know before, having a really good team that works together well, you know, both on the home insurance, on the loan, on the title, in the real estate, all of them working together can just really make those bumps in the road a lot smoother and get right past them.
Most definitely. No matter what, even if you have the best team, things will come up when you're buying a home or whatever the case is that might be unexpected, and having a good team that's, you know, able to get you through it.
And they might be completely unpredictable and unforeseeable.
Absolutely.
Sometimes they just show up.
Now, one thing that we do at Impact Loans that a lot of lenders don't do is we go through a full formal application prior to getting the loan into process. So we're going over questions that it's not a formal application we have. It's called a Uniform Residential Loan Application. Every lender should be doing that before they get your loan into process. Not everybody does. We're really by the books because we know how important it is. And sometimes you'll find something out about a client that you didn't know. You know, maybe they pay child support. Maybe they're on a tax repayment plan. There's things that can come up that you might not remember to ask about. So it's really important to have a process and cover all the bases prior to getting the loan into underwriting and charging somebody to order an appraisal. You know, at the end of the day, the client is trusting you to get from A to Z. And when we do the right things, we're going to discover things that maybe we would have found out when we got the title work back. And then we can plan for it ahead. So instead of it happening like at the last minute, I'm like, hey, guess what we found out? We're having the conversation before we get the loan process started saying, hey, you're going to need to potentially, you know, let's say pay off your taxes that you owe, if that ends up being the case. A lot of times you don't need to, because we'll just factor in whatever the monthly payment you have on your tax repayment plan is. but that's just an example that I'm using. Something we can discover up front just by doing the right things so you don't have a bad experience.
Well, and sometimes you can go through the entire loan process, get approved, be ready to close, and sometimes buyers, because they don't know, sabotage their own transactions. What are some things you suggest not doing as a buyer so you don't sabotage your own transaction?
Yeah, that's so true. Don't open up any new lines of credit. So don't go and buy a couch for the new house before you close on your house, because we're going to need to factor in what that payment is going to be into your ratios. That could affect your loan and the program that we went with in the first place. So wait until after closing to open up any new lines of credit. I always tell my clients, wait to buy the Lamborghini until after we close.
Yeah. Don't go on a shopping spree until after closing.
Yes, so true.
Always. That's one of the most heartbreaking ones, because you're so excited. Everything's worked out, and then suddenly you get to the closing table and that car you bought ruined everything. So don't do that.
Yes, and there's a couple things, like you pointed out. Don't go on a shopping spree. So if I approved you up front with having a certain amount of money in the bank, don't go and spend all your money once we have the initial approval. Because if we need an updated bank statement for any reason and your assets and your savings are less, that could affect the loan.
Mm-hmm. So thank you. Very key things, and people don't think about that. They're excited.
Yeah.
They want to move on with life, but there are certain things you got to be careful about.
Mm-hmm. They think, we're in the clear. We got the approval. It's not over until it's over. So just hold on tight.
Wait for the keys.
Yes, until the keys are in your hand.
Absolutely. So what is your favorite thing about helping people buy new homes?
I would say my favorite thing about helping people buy new homes is just being a part of their story. You know, I think it's kind of a cool thing to say that you help somebody buy their first home, and, you know, they'll never forget you. And, you know, if you do your job right, you'll keep in touch with them. And, you know, you could be somebody that, you know, is an important networking person for them in their life, and somebody they can refer their kids to one day.
I agree. I think that's one of my favorite things too. It really is kind of just, it's neat to be able to be a part of that part of someone's life. It's a real special time picking a home, where you're going to live. It's very personal, and it's an honor.
Absolutely,
to be a part of that process.
It really is.
So, all right, we are moving on to the lightning round.
Okay.
The lightning round, I have a series of questions I'm going to ask you really quick. You are supposed to answer with the first thing off the top of your head. No, you don't get a bunch of time to think about
Okay.
this. Ready?
Let's go.
You ready? All right. Favorite color?
Green.
Favorite indulgent snack?
Donuts.
Donuts.
Yes.
They're so good.
Yeah, they're
Filled
always
or
been my
not filled?
favorite. Not filled.
Not filled?
I'll eat anything.
Okay. I'm a filled person
I like the
personally,
chocolate ones.
but
Like the chocolate glazed.
absolutely. Those are really, really good. Aren't they? They are. All right, so back to the lightning round.
All right.
Favorite thing to do when not mortgaging?
Spending time with my family.
Yeah?
Yeah.
Tell us how old your daughter is again.
She's 8 months.
Yeah, and
She's
got the
just
curliest
so funny.
hair. Absolutely adorable.
Yeah, she's
Yes,
got all this hair.
Ever
She's
since
climbing
she was born.
everything now.
Is she really?
Yeah.
That's so fun. I love that stage. All right. Back to the, all right. Paperback or podcast?
Podcast.
Podcast. Okay. Which one do you most recommend to anyone who's listening out there?
I don't know if I would recommend, you know, it's a hard question. Recently, this is so random, but I've been listening. I don't know if you know who Napoleon Hill is. He wrote
I do.
I think he wrote like Laws of Success and another really popular book. I've been listening to YouTube like videos of him like speaking. I find it very inspirational and thought-provoking. So that's what I've been listening to lately, and I recommend it. I send it to my wife and my brother, and I get mixed reviews. Some people say it's boring, and some people like it.
Well, I've read one of his books. I wouldn't call it boring. It's if you want to learn how to sound financial principles, Napoleon Hill's fantastic.
Mm-hmm.
Yeah. Okay. Favorite local restaurant?
Favorite local restaurant? I just went to Aurora recently. I don't know if you've heard about it. It's a pretty new restaurant.
It's called Aurora.
Aurora, yeah, in Commerce. It's really nice, yeah.
So for someone like me who's never been to Aurora before, what is the must-try dish?
Oh, I got the steak. I got a New York strip, and it was really good.
Okay. Aurora in Commerce. Get the steak.
Yes.
Very cool. Favorite Michigan season?
Summer.
Summer? What
I
do you
love
love
summer
about
in
summer?
Michigan. It's just perfect weather.
Yeah?
Yeah, and I
You
love
like
the
the
sun.
heat?
Yeah, I like the heat. I like the heat in Michigan. It's not too hot.
That's true. It's not too hot in Michigan. It's great here. All right. Favorite Michigan vacation spot?
Favorite Michigan vacation spot? Well, I went up north last year, and it was great. I'm trying to think of, it was at the Bay Harbor. I'm trying to think
Okay.
of where that is, but it was really great and really nice.
Bay Harbor. All right. Do you offer free consultations?
Of course,
Absolutely. And how can people find you if they want to reach you?
they can find me on Instagram, just my name, Ross Bahro, ROSSBAHRO, Facebook, or they can call Impact Loans. Look us up on Google, Impact Loans Troy. We have over 100 five-star reviews, so we take our clients' experience really seriously.
Fantastic. It's been so great talking to you, Ross.
You too, JoDee.
And once again, I highly recommend Ross. All of your mortgage refinancing needs, he is a really great guy to have in your back pocket.
Thank you so much.
Yeah. Thank you so much.